Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I got to be able to make friends. I'm just trying to make Wall Street's endless confidence in the People's Republic of China never seems to stop. For decades, China did have a tremendous, scorching economy. That hasn't been true for some time. The idea of buying any stock because of its Chinese exposure is downright. Let me go down the list of usual suspects. This angers me so much. I need you to focus. First, it's Caterpillar, right? Now, long ago, Caterpillar decided it had to diversify away from China. Too often, the business would swing with the vicissitudes of the Chinese economy, not ours. That is no longer the case, people. There are so many other important markets like the U.S. oil market, the U.S. infrastructure market, the U.S. data center market, and the minerals markets worldwide. As we see more and more federal infrastructure money flow from the states to the road builders, you better believe Caterpillar is going to get a flood of orders. And look, even though it's much less China-oriented than it used to be, when people think our relationship with the Chinese government has improved, they always buy the stock in Caterpillar. Hey, we took the unthinkable stance of actually letting a little Caterpillar stock go today for the trust. Something we'll talk about when we have our investing confab on Wednesday at noon. Cat's a terrific story, but it's not a China story. And I'm afraid the 3-point gain and a few points that are leading up to it may not hold.
So Cramer says sell, essentially, Caterpillar. So you know what we want to do. We want to figure out where to go long. Now this is the monthly chart. Price is currently at 255. It is about to test all-time highs at 266. Let's go to the weekly chart. And when I look at the weekly chart, I can see price is respecting this short-term uptrend line on the weekly chart. Let's go down to the daily chart. And I'm interested in when earnings is, and we have earnings in early August. What I can see is that price has been respecting this 252 level. And that's demonstrated by the wicks here, which is telling me that we have buying pressure here. I also see a gap. So let's look at a target being the 262 area. Let's go down to the 4-hour chart. All right, so we have consolidation occurring. So a breakout is inevitable. Not sure if it's going to be to the upside or to the downside. Let's go back to the daily chart. Let's put a little box around the last 3 days. If we get a breakout to the upside next week, look for price to continue to move higher to the 262.50 level, where that would be a close of the gap that was established in late January.
Hey, how about Starbucks, another stock that's rallied 3 points today? Starbucks has a definitive plan to grow in China. They're putting up new locations here every 9 hours. There are already more than 6,200 Starbucks in China with a plan to get to 9,000 by 2025 versus 16,000 in the U.S. But when you hear that our government's relationship with China could be on an even keel, well, the stock gets bought. Given that Starbucks sold off hard when things seemed rocky, I understand why it jumped today, but I say this.
Next, we got Starbucks. And when I look at the monthly chart, I see resistance, support, resistance at the $95 level. When I also look at the monthly chart, I see smooth sailing higher above the 103 level. Let's go to the weekly chart, and we can see for the past couple of weeks, prices have been range bound. I also see the weekly 13 and 26 simple moving average pointing down. So we need to see price get above 105 before considering going long. This is the daily chart. As you can see, we have had several false breakouts to the upside. Now, if we do have a breakout to the upside again on strong volume, that would be a signal to go long prior to the price getting to the 105 level.
Last week I covered the sad saga that is Nike, which seems to have lost its way as it's doing a huge amount of business but not making a lot of money from it, which is what I care about. China's on fire for Nike, okay? They're not seeing any slowdown whatsoever, despite the high price points for many of their products. But China only makes up 14% of Nike's business versus 42% for North America, 26% for the Europe, Middle East, and Africa region. The idea that Nike's a China stock is a ridiculous pipe dream. Still, I get it. Nike's partnered with China's Ministry of Education to improve the health of several million kids. But unless the government decides to buy everyone a pair of Nikes as a way to stimulate the economy, you're making a big mistake if you buy Nike because of diplomacy.
This is the monthly chart on Nike. And after hitting a resistance support band near the 104 level, prices have reacted and bounced higher. Based on the monthly chart, we could get as high as 128. Let's go down to the weekly chart. We can see near-term resistance, which was support at the 116 level. This is the daily chart. And earnings, which occurred on June 29th, price sold off, and a steep loss. Prices appear to be recovering. We get above 110. Look for prices to continue to move higher to the next level at 116.
Of a hack China play, and that's Wynn Resorts. Hey, Trust owns it, casino company, 75% Macau, even as good business in Vegas and Boston, too. And that's why Wynn stock rallied almost 6 points today. I think people are looking at pre-COVID numbers with Wynn because Vegas and Boston are growing now, and the Macau business is just not as good as it used to be. But there's one stock that I am willing to endorse as a genuine China play, a nouveau China opportunity, and it's Ralph Lauren. To quote their last conference call from May, "We are strongly encouraged by our continued brand momentum in China following the country's reopening." CEO Patrice Louvet, smart fella, says, "We drove full-year China sales up more than 20% in constant currency, including acceleration of fourth-quarter sales up 40%. Looking ahead, we expect China to remain one of our fastest-growing markets," end quote. There, finally, truth. Where do I come down on these? Look, I support buying Ralph Lauren as long as the American business holds up. I can see buying Starbucks as long as their Cold Brew sales continue to accelerate in the U.S. But the days when you could invest in these stocks purely based on China growth, those days are over.
This is the monthly chart on Wynn Resort. And price did come down to the weekly bias level at 100. I do have a short-term target at 120, despite Jim Cramer recommending a buy on Wynn. If we drill down to the weekly chart, we can see that price did penetrate the zone 100%, had a double bottom, and prices have moved up nicely. This is the monthly chart on Ralph Lauren, and I am not impressed. Jim Cramer recommends Ralph Lauren. I recommend leaving this stock alone, as there is a major resistance support band at the 140 level. Price is at 125. This month's candle is looking bearish despite it being green. Ralph Lauren is a no touch.